Good evening to all. My name is Michela. I hope you both, I'm talking to the organizer, are able to hear me well. I hope all attendees are able to hear us well. Good evening. I'm speaking on behalf of Swissquote. Tonight we are going to present a new partner, and Nikos Trading Academy is one of our new partner, and in cooperation with Nikos Trading Academy and with the person of Tomek Kowalski, we are going to talk about Heiken Ashi charts and Renko charts. Confirm if you can hear us, please. Okay, yes, amazing. So I hope everybody that is present in the webinar tonight heard already about Swissquote. Swissquote is part of a Swiss banking group, a Swiss leading banking group with a higher tier one, actually is around 28%. We have over 300,000 customers all over the world, and we are regulated by the FCA, and we are specialized, especially in London, so within the London branch, over the CFD trading. So basically, we provide the CFD trading opportunities to all retail and professional customers. We are talking about opportunity because CFDs is sometimes a tricky market. Actually is let's say is an instrument that is not well known by everybody. I would say that we are treating the markets pretty well. We have deep liquidity. We are applying an STP business model in London. Our offices are around Liverpool Street, so I don't know if someone of the people that are present in this webinar are from London. We are, let's say, we welcome everybody to meet us in person and in our offices. I would say that we provide very good services. I would say that we provide as well services in relations to, yes, CFDs and also to, let's say, different services connected to CFDs. So even services for more professional clients, money managers, introducing brokers or institutions and funds. Let's skip this part. I'm gonna speak directly about. I'm going to showing you directly the disclaimer. So our disclaimer in particular is very, very important. This webinar is recorded with a camera, transmitted directly online, and not intended to be distributed or used by people in countries of jurisdiction where it distribute violate local laws. I would say that CFDs are complex instruments, and present a significant risk of losing money quickly due to the leverage. This is a very important subject. We are going to treat this subject for sure, not only today, but deeply in the second and third session. We are covering for sure risk management. So we will talking about leverage and leverage use for sure. 78% of retail investors' accounts lose money due to CFDs, and I would say, and I would add, sometimes because they don't understand well the risk involved in the operations. So consider whether you understand how CFDs work and if you can afford to take the high risk to lose your money. Remember that all investments has a risk involved. Swissquote Ltd is authorized and regulated by the FCA, as I said, in UK. FCA register number is 5621770. So feel free to, let's say, check on the FCA register our regulation and who we are, what we do, since when. The content of this webinar was created as of today and may be subject to change without notice. This is important, as well as the information on past and return, let's say, results are not a guarantee for forecast or future returns. So this is not an investment suggestion. Let's say. Swissquote Ltd is not liable, and please consider every time your personal situation when you want to make investment. This is not an investment research. Okay, spent a lot of time about our disclaimer, which is very important. I'm going to introduce Tomek. Tomek is one of our speakers, actually is the main speaker of today. Tomek Kowalski is quite a young guy, pretty, let's say, successful in trading. And now I would say that is the time to leave him the world and let him introduce himself. About me, I would say normally I'm covering the Italian market, so forgive me if my English is not perfect. I'm preparing this webinar. I prepared this webinar actually with the cooperation of Nikos Trading Academy, because I really wanted to bring to the English customers and to the English audience a new and let's say a different content from our perspective, and considering our offer, let's say yes, completely different, because we've never approached the English market. I would say my experience in the trading started 6 years ago. Now I'm leading the Italian team, and today we are going to speak about trading and Heiken Ashi and Renko chart with Tomek. So I'm leaving you, Tomek, the stage. Feel free to present yourself.
Okay, hello everybody. Can you hear me well? Michaela, can you confirm if everything is okay? Can you hear me?
I can hear you very well, and I think everybody can.
Okay, perfect. So, hello everybody. My name is Tomek. This is my picture. I'm right now full-time trader, and I'm mentor in Nikos Trading Academy, where I, of course, teach people how to trade. My journey with Forex started like 8 years ago. And of course, it was at the beginning, it was really frustrated and difficult. But when I met my mentor, Nikos, everything changed. And thanks to him, he trained me, he changed my mindset, and I become successful trader. So since I think for 3 years right now, I'm trading. I live only from trading. I'm full-time trader, but I love to teach people, and I also love to pass knowledge because I think that if we approach the market correctly with good rules, with the good trading strategy, we can easily achieve success. So right now, I teach people in the Nikos Trading Academy, and plus I also do live trading rooms with my colleague Yanis, which is also one of the mentor in the Nikos Trading Academy. So this is all about me. Long story short, I think so. Like Michaela said, I will show you what we do. Basically, we trade on the Heiken Ashi charts and the Renko charts. So let me share my screen. Or Michaela, can you share my screen, because I don't see any options to share it. Okay, perfect. So now you should be able to see my screen. Can you
Yes, I can see your screen. I think
okay.
Everybody can. We can see two charts.
Yes, two charts, New Zealand dollar yen. On one we have classic charts, and on the Heiken Ashi.
Yes, it's a daily chart, yes.
Okay, perfect. So, but just before I start, I just want to tell that we also prepared special members area for you guys. So you will also find a little bit more details in this members area. We made it especially for the Swissquote. So of course, Swissquote will, Michaela probably will send all details how to access this members area, where you find everything, our templates, indicators, and other things. So basically, when we start trading, when I started trading, I started with the Japanese candles, which are right now really popular to trade. We use different type of candles. We use Heiken Ashi candles, which works more or less like Japanese candles, but they filter out more noise on the market. So you see right now two charts. Here is the classic Japanese candle chart. When you see a lot of noise, we see that when price is going up, we have small candles, then we have like red candle, white candle, again red. So it's a lot of noise. When we just check Heiken Ashi charts, which you can see above, you will see that the price movement is a little bit slider. We have we can easily change with check with our eyes if price is going up or down, and it's also visible when we have clean trends. When, for example, here price is going down, we have some retracement, again is going down. We have only one color candle. Here, if we compare to the classic candles, we see that it's much difficult to read price action because we have a lot of noise in between. So even it's difficult to say something. You just only can see this, yes, that price, you see this move, price is going much smoother on the Heiken Ashi than on this. We have retracement, in this case we have same, but basically when you just compare to your eyes, it's much easier to read chart on the Heiken Ashi than on the Japanese candles. That's why this is the first rule why we use Heiken Ashi candles. I will not go in details how they work because in my opinion it's completely not necessary. The matter is how to read charts properly and how to understand market direction. We also use Renko chart. And one more thing, those charts also works like the Japanese candles. So those candles are time-based. So we also have daily chart, 4-hour chart, 1-hour chart. So everything works exactly the same. And you see when we just change maybe to 1-hour chart, it's much easier to read price action on the Heiken Ashi than on the Japanese candles. We don't use any patterns on the Heiken Ashi charts because Japanese candles use many different patterns like pin bars and engulfing. On the Heiken Ashi, we don't use it at all. Yes, I will show you later our system, but basically there are no patterns regarding these candles. We also use Renko charts candles, which are completely different than standard candles, than Heiken Ashi and Japanese candles. You need to use, of course, separate indicator to use it, but everything you will find in the members area. But when I go to classic Renko candles, you will also see that they are filter even more noise from the market. Yes, so if we just check, if we compare two charts, this is daily chart. This is M24, which I explain soon. This chart, you will see that here we even have more details, because even if price is moving smoothly on the Heiken Ashi charts, Renko charts are making still lower lows, lower highs, where we have opportunity to look for possible entries. This is classic Renko chart with the classic boxes, but how we can also use this, we can also use Renko charts plus Heiken Ashi indicator. So if I show you this template, it will be even much smoother than classic charts. And we have like clean situations where price is making higher lows, lower highs, sorry, lower lows. Yes, market is moving much smoother on the Renkos than on the classic charts. You see here we have a small range also here, but it's more visible than on the classic charts. Why this happens, why the Renko charts are much cleaner? Because they are not related. I will just switch to the classic chart and I will make it bigger. Those candles are not related with time frame. So it's not that one candle will finish after a period of the 1 hour. Those candles are related only to the price action. That's why we use settings, which means that each box which you see here is 24 pips. The naming is different because this indicator shows 240, which means that this is only in points, yes. But basically, we set the Renko candles in pips, so it's really good because they are filter out even more noise. Because if we, for example, have range on the 1 hour chart, which is, I don't know, 15 pips, and price is moving in this range, 15 pips for another 3 hours, and we set Renko candles to see candle every 24 pips, we will not see candle in the Renko chart, which means on the 1 hour chart, price will be ranging for 5 hours, and on the Renko candles, price will stop on the 1 candle. So Renko candles are made when price will move 24 hours, 24 pips in each direction, in up or down. Of course, you can set the pip value as you like. Yes, I'm right now showing you M24, which is 24 pips per candle. But if we go lower, for example, to M60, this chart shows us each box 6 pips. So it means that if price moves 6 pips, you will get another candle in both direction. So it's really good to filter out whole noise on the market, and it's really easy to use. It's much easier also to read the price action. However, like I said, it's not related exactly with the time frame, but only with the price movement. And of course, you can change box sizes as you like. We have different setting for scalping. We have different setting for intraday trading and swing trading. So all settings can be changed with one click on the only on the MT4 platform right now. So basically, this is all about the candles. We of course also mix classic candles with the Renko charts, but basically I will focus mainly on the Heiken Ashi charts at the in those webinars, because to cover everything it will be simple too much for everybody. But I hope you understand where is the difference. I will put again template with the Heiken Ashi chart, so you will see also when we just change some values, you will see that it's much easier, yes, to read price. We see that even if we have range, it's much easier to see when price is moving. We have only one direction, yes, like white candles, then retracement. So it's much easier to read and try to find possible entries on the Renko charts than, for example, on the classic Heiken Ashi or especially Japanese candles. Do we have any questions to candles? Because right now I would like to start with our strategy.
I encourage all people, all attendees to make questions if you have some of these, because we are glad to reply to your question. We are here for this. So I think that you, Tomek, and we are more than happy to reply.
Yes, of course. I love the webinars when I ask when I can reply to questions, because then I know that people are listening to me. You know.
They're following because I can see comments on chat, but apparently it's very clear and they don't have questions. So I would move forward.
Okay, perfect. So let me close this, and I will introduce our main system which we use. Let me just put our template here. So basically, we don't use any indicators except 3 moving averages, and our system basically works with the price action and our analysis, which is top-down approach. We also use simple patterns to entries. They usually people say ABC or 1 to 3s, which I also show you. So basically we use 3 EMAs. First EMA, this blue one, is 12 EMA. Second EMA is exponential EMA. We use also 36 EMA, which is the orange one, and we use 200 EMA. So basically, that's all our system. We like simplicity. We don't like to have any other indicators because really often they confuse you how to make decisions on the market. So we use Heiken Ashi candles, 3 EMAs plus horizontal support resistance levels, and of course trend lines. And this is all what we have. So with the Heiken Ashi, we can identify really clean market direction and price action. Our main thing before even we start to think about trading, about entry, about the setups, about risk management, what we do, we always do our analysis, which is called top-down approach. It's really simple because it's nothing new, but most of the traders forget about higher time frames. Even if we try to trade intraday scalping, it's always good to see what big time frames trying to show us. So our top-down approach is really simple because we start to analyze market from the weekly to daily chart, 4 hour, and that's enough. Yes, sometimes we also, if we trade intraday or scalping, we can go to the 1 hour chart also. But basically, we try to find market direction. We try to identify if we have uptrend, downtrend, range, and if we trade with the market direction or against the main direction, because it's really important. So we will focus right now on the New Zealand dollar yen, and I will show you how we find trend lines and how we find support resistance level at the beginning. Like I said, we start from the weekly chart always, yes? Even if we go to scalping to 1 minute or 5 minute, we start from the weekly chart. How we find support and resistance level, because we use Heiken Ashi chart, it's much easier to see where price is reacting, where we have bounces and where we have a reaction. Usually when we draw support resistance levels, we try to find as much spikes as possible on the weekly chart. So which means that we need to find zones where price is reacting. So for example, right now we are here. Yes, so let's try to find the closest resistance level because we see white candles, which means price is pointing up and is pushing up on the weekly chart. So let's try to find the next clear resistance level. So if I take my line, I try to find as much spikes as possible. Right now I see spike here. We have this funny spike here, and when we go back, we don't have any spikes here, yes? So for me, this is not important resistance right now because I see that I have only one reaction here. So I go higher, I drag my line, and I try to find level where I see that price is reacting many, many times. And I will see that here I have one spike, I have second, third, fourth, fifth, sixth. So you see this level, price was reacting a lot. Yes, we see that here we have down move, price started to range. Then after some time, price again reached this level, and what we had, another range. Then we had this huge spike around this zone. Then price broke it, retested, continuation. So for me, it's really important level on the weekly chart. Again, we have one rule, we need to see at least 3 touches, 3 spike on this level. And we always don't draw everything, all lines, but we try to find closest resistance and support level to the current price move, current price action. So let's, for practice, let's try to find other levels. Yes, so you will see how I think. So we just take this, and again we try to find really clean levels, guys. We don't try to overanalyze to see maybe this, maybe that. If you start to think like that, it means that there is nothing you can see. Really clean. So I drag my line, and again I try to find clean reactions, clean levels. And what I see here, again, price is reacting, spiking, is retesting. Of course, market is not perfect. Sometimes we have a lot of false breakouts, some noise. So in this case, we can go to lower time frames to see more details. But basically, again, we see one spike here, second spike here, another reaction here. Yes, we see price up. There was up 400 pips. Please remember that we are on the weekly chart. Another reaction here. Yes, then after bouncing, price moved another 600 pips. Yes, so we have another resistance level. So let's take our line again and let's try to find another one. And when we go up, we will see that around this zone we also have resistance. We have spikes here. Here we didn't have any touches, but we have reactions here. Here we had the false breakout, another retest, and another retest here. Like I said, market is not perfect, so we need to understand that I draw the lines here, but this is always area. Yes, this is always like kind of zone that we have false breakouts sometimes, like spikes here, and sometimes price is not reaching those levels because, like I said, this is always area. Yes, so we need to understand that market is not perfect. So let's try to find another resistance zone. So if I go up, we will see that where we have a lot of spikes, a lot of touches, where price reacted at the tops. Yes, so we see here, also here, also here, and that's all. Yes, we didn't have any other things. So those are resistance levels for us because it's above the price. So let's try to find support level. We will not have much here, but if we just check, we will see that here at the bottom, we will have support level here. Yes, so we have this spike and we see that price was struggling around this level. So it's really easy, to the point. We don't try to complicate things. We don't try to find what we cannot see. I will also show you on different charts. We will practice this a little bit, but basically we use this, but we don't want to have too many things on the chart. So I will remove those resistance level because we don't need them. We just only need the closest resistance and support level to current price action. So we have right now this resistance on the weekly and this support on the weekly chart, nothing else. Also, why we use EMAs? Because at some point, if we cannot draw trend line, if market is too steep or there is no clean trend line, we use 36 EMA as a resistance and support level. Also, in this case, I couldn't find any resistance level around this zone because I didn't have much spike. I don't have history, okay, but I have my 36 EMA, which acts like a resistance in this case. So my first goal for possible, I don't know, reaction for the price will be 36 EMA. I will also later explain our 1 to 3 pattern, so you will understand why we look also for 36 EMA as a support and resistance area. So that's all for this. Next step is trend line. We try to find trend lines because trend lines are really powerful on the market. But again, our rule is minimum 3 touches, because if we have minimum 3 touches, we will have good angle of this trend line. So we take our tool and we try first close to the price. We try to find some trend line. So what we have, yes, we can try to take lower highs and try to mix them, and we will see that we have this trend line. And why I told you about 3 touches, because right now we start to think, should I draw trend line here? Should I draw trend line like this? And you start to think, if we have 3 touches, then you will see that trend line is coming really smoothly and you don't have to overanalyze how I should put the angle. Our rule is usually that we draw the trend line or lines between body and tails. So if we have spikes like this, we just cut this by half. So we have first trend line with only 2 touches, yes, here. So let's try to find other lines, yes. we will see that we have another line here, yes, and we have more spikes, more touches, yes, we have 1, almost 2, 3, 4 touches. So you see, we don't have to think, okay, should I draw it like this? Should I draw it on the highs? No, you just take the line and you just extend this line. It's as long as price is reacting on this trend line, then we know that we have really powerful trend. We can also try to draw from this level. If we check this, we'll see, okay, we have again only 2 spikes, but this is also smooth line, because in this case we cannot change angle much in this trend line. We also can find trend line here. Again, we take the lowest point, yes, and we just extend on the between body and tails our lines, and you see we have trend line here, and we just later extend, yes, and what we see, reaction, then again what we see, another reaction. So you see we have like 1, 2, 3, 4 touches. So this gave us angle, and what we had, price retraced ideally to this trend line and reacted another 700 pips. And also here you have trend line and another reaction of 400 pips, yes. So this is what we do on the weekly chart. So when we go back to our approach, because right now we are here, what we have resistance, we have support level, we have trend line here, yes, this is our line. Closer to the price, we have trend line here, but it's like I said, this is also close to the 36 EMA, so we don't have to use this trend line because we have our EMA here. So this is enough on the weekly chart, yes. We use weekly and daily mainly to find direction and when big money are going, yes, because we all know that big traders, institutions trade on the higher time frames, not on the lower time frames, and we would like to follow what big guys are doing. So basically, to summarize this weekly chart, what we have downtrend, definitely, because price is making lower highs and lower lows. Right now, price was in the range, which will be more visible on the daily, reacted on the support, and right now it's climbing up, which means that we might have retracement to which level? 36 EMA, which act as a resistance. Then we have trend line, then we have resistance zone. We just draw this level to understand where market can react. Yes, it doesn't mean that price must react always, yes, but we need to understand where are the key levels on the weekly chart, so we can manage our position, take some profits, or understand if the trade is aggressive against the main trend or conservative, yes. So that's all what we need on the weekly chart. Resistance, trend lines, and market direction. Then we go to daily chart. On daily chart, we have, of course, more details. We can adjust our lines, yes, on the weekly, from the weekly. If you see that the lines are same on the daily, you just simply adjust the line on the daily chart to see this better. Of course, again, we understand that this is area. This is not like one line, yes. So this is daily. We have resistance, we have support. So on the daily chart, we also try to find trend lines and support and resistance levels, because weekly time frame is really big time frame, but we need to understand those levels, because imagine that if you don't make any weekly analysis and you are here, for example, and you try to sell it, yes, you try to sell it, you go to 15-minute, okay, you have entry setups and you try to sell it. This is the really not good area to sell, because what we know, we are on the weekly support level, which means that we might have bounce in the opposite direction. This is weekly chart, which means that we might have a lot of noise on the lower time frames, because this is level where investors are making decisions what to make next. should we continue, or should we take profits and change trends or something like that. So that's why this is important. Daily chart, we also try to find exactly the same things, which is resistance and trend line. So what we have here, we have information that price bounced on the weekly chart and right now is pointing up. Do we have any levels close to the price on the daily chart? Here we see that price went up, spiked a little bit, and went down. Can we connect something to this level? Not exactly from the history, yes, not exactly from the history, because we have only one spike. But what else we see? Price try to retest this. If we cannot find anything else in the history, we can always try to unzoom our chart and scroll back a little bit in the past to see if there was something on the daily chart. And what we see magic, yes. Price started to spike. We also have false breakout. So you see, that's why I always say that this is area. We also have false breakouts here, false breakouts. So we had our level with this resistance zone, yes. So it's good. We had confirmation about that. Yes, so we can leave it. Right now price is on the resistance, so we know this. We go a little bit higher, try to find if we have something next. And on the daily chart, what can we see here? Price went down, reaction, went up, reaction. So we have like double bottom here, and then price went up again. So this level is good for us because we had the reaction. And again, we can scroll back a little bit. What we see, this spiky candle here, okay, we have this zone. In the past, did we have something? We also have some spikes here. So this level is also good. Yes, again, we try to find levels where price is reacting. Yes, we don't try to draw too many lines because it's really unnecessary. So we have top-down approach on the weekly and half on the daily. So what is the next step? We try to find trend lines. Let's try to find from the tops. Yes, again, what we do, we connect spikes, we extend the line. What we see, another spike, so we take extension of this trend line, and what we will see that our trend line ends here. Yes, so we have trend line, we have resistance, we have another resistance here where price is right now. We can try to draw maybe some different trend line on the daily. Yes, from this top. Yes, we take this and we try to connect as much as possible. And what we see, only two spikes, but the trend line is also close to the 36 EMA was broken. So we don't need this trend line anymore, but for practice, we can just always use. So,
Tomek,
yes?
Can I interrupt for a second?
Yes,
I'm
sure.
really interested, but we have an important, well, important to me is an interesting question. There is a guy named Miguel that is asking, aren't those past references too old to be considered now in a smaller time frame? So in other words, why you're choosing, you're picking a daily time frame or a weekly time frame and you're considering these?
Why? Because we need to find direction of the main trends. We cannot trade on the 5 or 15 minute without knowing what price is doing. Imagine that we go immediately to the lower time frames. Yes, to the lower time frames right now. We go to 1 hour chart. Yes, what we see, that price is going up. Yes, price is going up. So what we start to do, we start to buy. Yes, because we have, for example, information that price is pointing up. We trade with the main trend, we start to buy. But this whole area is not good for us to buy, because if we don't do our top-down approach, so we don't know that around this level is the resistance from the daily chart. And how we try to trade with our strategy, we use those levels for targets and to understand where not to trade, because the main thing is to understand where is key or we call it profit zone to trade. So that's why we start from the higher time frames, to understand market direction, to find levels and to take trades in the correct areas because it's really important, because we cannot go against the main trend, yes, or of course we can if we have enough room, if we have rules to do it. But this is really not good area right now, or this was not good area to sell, because we know that this is weekly zone and daily zone, yes. So that's why we do it from the higher time frames, and we slowly go to lower time frames, yes.
And what about let's say, the process of finding resistant areas? Because Michael is asking, my question was related to process of finding resistant areas. It seems to me the references used were too old.
Could you repeat, because I didn't under too old
Yeah,
levels?
the the,
Uh,
re- the
no.
references to pick resistant and support areas.
Yes, but we take it from the weekly and daily chart, yes,
Mm-hmm.
because they are from bigger players. Big guys like institution rule the market. They are moving the market, not small guys. So even if we don't have history, we always try to find where price is reacting, because you see, if we don't know that this is weekly support, but we start to sell it, there is no point to sell it at all if we had later on a reaction 600 pips. Why is the point to sell it if this is weekly support level, when all big players are making decision where to go next? We usually prefer to wait to see clean confirmation of breakout, or clean confirmation on bounce.
Yeah.
And because people don't make those analysis, they usually don't understand where to trade, how market moves. And the key factor is to understand how market moves. And we cannot see market movement on the 15-minute or 1 hour chart. This is not market movement. This is short-term movement. Real movement is on the weekly and the daily. Yes. This is how we approach, and then of course we combine this with lower time frames, and then we know, okay, where we should wait, where we should trade. Yeah.
Yeah.
I hope that I answered this question.
Yeah. Yeah. Indeed. To me, it's clear.
Okay. Yes. So we have this. We go to 4 hour chart. Yes. And on the 4 hour chart, basically, we start to look for the swing trading entries. Yes, we start to look for the swing trading, or also intraday, which I cover, of course, on the webinar number 2 and 3. And usually we don't draw any other lines on the 4 hour chart. But if we see that something is clear, that we have clear market movement, or market is reacting somewhere, we can also draw support, resistance levels, and trend lines. Usually we try to draw trend lines because we look for possible entries where we have retracement back to the 36 or back to the trend line. And the rule is exactly the same. We have trend line here, for example. Yes, we just connected the lowest points, and we will see trend line, yes, where price might retrace. Yes. When we look for another trend line, for example, on the 4 hour chart, right now I'm just showing you how we draw trend lines, yes, because this is really important to understand. Yes, we also have trend line here. We have like 1, 2. Here we didn't have touch, but here price reacted also. Then we have false breakout. Price went down again. So what we can do, we can change angle of this trend line, and we have this trend line. Later on, price broke this. So from the top-down approach perspective, basically we focus on the weekly and the daily. And for our chart, we start to think, okay, how we would like to trade. Like I said, we use 1, 2, 3 patterns, or ABC patterns. We call it 1, 2, 3, which means we need to see move. Then we need to see retracement. Ideally, retracement back to our 36 EMA. That's why we call it support resistance level, and we call it profit zone. 36 EMA, if I can say, if we have healthy trend, it's like 50, 61.8 Fibo retracement. Yes, if we have nice trend and smooth move. So if you start to measure, you will see that it's between 50 and 60 Fibo retracement. So we need to see move, then we need to see retracement. And when price is breaking, and this is point 1, this is point 2, this is point 3. And if we see breakout of our 2 to 3 line, then first candle after breakout is our entry, and stop loss we put below point 3. I will set about this in much details when we cover swing trading and intraday. Right now, I would like to show you only this small thing so you understand how we approach, how we enter the trade. And we only use this one small pattern. That's all. We don't use anything else. So we basically wait for 1 to 3s. So this is 1, 1 to 3 here. We can also find another 1 to 3 here. Yes. And we need to see what? We need to see smooth retracement, smooth move, and nice retracement back to the 36. So whenever price is making those scenarios, we know that price is in the trend and we can jump in. So we did our top-down approach, yes? We did our top-down approach on the weekly, daily. We are on the resistance. So what we know right now, we are on the resistance. What price might do on the resistance? Can break it and will continue to go up. Where? To our next resistance from the daily and weekly chart, which is here and here. So we already have area where to manage our profits. For example, take a partial of our profits, yes? So we have it, or we know where price might react and maybe will change direction and go against us. Or price might bounce on this level and where can go. Our next target is 36 EMA because what we would like to see here, our pattern, which is 1 to 3. Back to the 36 EMA, yes. Plus, we might have retracement back to our trend line, yes. So our first area will be 36 EMA. Second area will be trend line. Yes, that's why we draw a trend line. You saw on the weekly chart how price is reacting on the trend line where we have at least 3 touches. What we might have here, right now we are on the resistance. We wait for our 4-hour chart 1 to 3, and what we can do, we can start to look for long entries. Yes, we can start to look for the long entries here, or if we see deeper retracement back to the trend line, if we still have higher lows, we can look for entries on this trend line, which is bounce trading. Usually we look for retracement back to the 36 EMA. So why we did top-down approach? Because if we start to look for the 4-hour chart entry here, where price reacted on the resistance, we cannot take this directly on the 4-hour chart. Because probably, I know this from experience that I will show you from when we discuss swing trading, but we cannot take this entry because our next area to manage is this resistance. Yes, because we know from the daily chart that price was reacting here. Yes, reaction and how big? 250 pip moves. So we cannot take this on the 4-hour chart knowing that this is daily resistance. If we don't have this resistance, feel free because next target is here. So if I enter here, my stop loss would be, I don't know, 50, 60 pips. My target is 120, 150. I'm okay with this. But if I have daily resistance here, it's really not good to start to look for the 4-hour chart entries because what we might have? We might have even some move, maybe double top, maybe lower high, and then price might retrace to this support level or to this support level. Why can price retrace? Because on the weekly chart, we are in the downtrend. So taking the long entries here basically are against the main direction because main direction is still pointing for sells. Yes, even if we go on the daily chart, we still don't have confirmation that price is pointing up. We have white candles. Okay, price is going up. Yes, like 200 pips. Okay, perfect. But to be sure that price is making or is changing trend, we need to see higher highs, higher lows on the daily chart. Right now, we don't have anything like that. Yes. So when we start to look for the lower time frame entries, that's why we did a top-down approach to understand where are we on the market. Yes, where we should trade, where we should not trade, where is the profit zone, where it's better to look for entries, or keep and wait. Trading is also about the patience. Yes, we need to have patience to see the price on the correct areas to to trade. Yes, so in this case, the best way will be to wait for bigger retracement on the 4-hour chart to the 36 or the trend line, which is our profit zone, and then start to look look for entries around those two levels on the lower time frames only, on the 1-hour chart, 5-minute, 15-minute, depends on the strategy which you use. Yes. So basically, this is like the main idea of the top-down approach and what we do. So when I go, for example, to the 1-hour chart, yes, like I said, we see what we have here. We have long 1 to 3. Yes, can we take it? Not exactly, yes, because we are on the daily resistance. So it's not good point right now to look for any entries because we don't have room. We might have spikes, false breakouts. It's pointless to be here and lose our profits. Yes, we can start to trade if we see that price is breaking this area, is making new higher high, is making new lower low, and then we can look for possible entries, but also on the lower time frames. Why on the lower time frames? Because on the 4-hour chart, we didn't have any bigger retracement. Yes, if we measure this move like was like 150 pips. And what we know about the market is making 1 to 3. So it's going up, is retracing, is going up, is retracing, is going up, is retracing. Yes. So this is what we would like to catch, those 1 to 3. So if we have breakout, perfect. But right now, if we go to, okay, we have, we can go to 5-minute, we can start to look what we have. Maybe we'll have 1 to 3 here, but completely wrong place to trade. Yes, good place will be 4-hour chart or trend line. Let me take some other pair. We can check Euro Yen just to show you this top-down approach. Yes, Euro Yen, where we have Euro Yen here. And when I finish this pair, you can choose the pair which you like, and I also can answer some questions regarding this. Yes, regarding our top-down approach. So again, weekly chart always. Basically, what I do is I prepare the charts every weekend. I grab all the charts. I do top-down approach because top-down approach is that for me it's right now easy. It's a couple seconds for me. But you can also do it like this when you start to practice because it's really not big deal when you start to follow this. But I grab all charts, I do top-down approach, and then I know what market direction is. I don't have to do top-down approach every day because it's not necessary. We need to do top-down approach only on the once a week. Yes, because market usually it's not moving that we have to change. Yes, if we have those lines, our lines are also from future, if I can say it. So we know already levels where price might to stop. So enough it's to do every week. Yes, and even if I train our students, I also give them homeworks to prepare watch list from top-down approach every week. Yes, to create a habit. Okay, so let's go to Euro Yen. What we see on the Euro Yen. Volatility is for short, yes, because we have lower highs, also we have lower lows. And I forgot to mention one thing. We use 12 EMA and the 36 EMA to figure it out what kind of the trend we have. If you see that 36 and 12, if 12 is above the 36 EMA, it means that we have uptrend. Is the easiest way to identify, to check what kind of the trend we have. If you see that 36 is above the 12 or 12 is below the 36, it means that we have short trend. So it's also visible here. You don't have to read price action correctly, but it's good to read price action. But EMAs are 36 is above 12. It means that we are in the down trend, but it's also visible here. So, okay, so price is right now here. We are on the 36 EMA. So let's try to find support resistance levels first. Yes, so we grab the line, we try to find first support level close to price. Yes, on the weekly chart, what we will find this level. Why we have like 1, almost 2 spike, another false breakout, a lot of spikes. Really good level, clean to the eye. Yes, we don't have to complicate things. Where is the next resistance level? Where we have some spikes, where we see that price was reacting. Do we see some reaction here? Okay, we go in past what we also see, some reaction, false breakouts also here. So we can a little bit adjust the line, yes, to have this. So we have next resistance level. Where price is right now, and what we also have, 36 EMA, which acts like a support resistance level. Let's try to find another level. Yes, another resistance. What we see, some spikes here, some spikes a little bit higher. So we have next resistance. When you go to past, we have here. That's all. We don't need anything else because price must break first this, so we can see continuation to that. So if price reach this, then we can try to find the next levels. But for practice, let's try to find. Yes, we grab our line, we try to connect as much spikes as possible where we see clean reaction of the price. What we see, spikes, false breakout, spike here, reaction in the past also. Okay, we grab another line, we try to find. Yes, we go up. What we try to find, some clean reactions. We have range here, false breakout here, but we had reaction here, some reactions here, also here. So you see, we have a lot of those levels. We also have level here. Yes, and you see, market sometimes is not easy. Yes, because you will find some levels here, but you also have some spikes here. But this level probably comes from the daily chart, and on the weekly you will find that. Yes, but still between those levels, it's like 100, almost 200 pips. Between this and this level, it's 300 pips. So even if we have close lines, this is weekly chart. So we have still room to trade. So let me delete the lines which we don't need because it's pointless to have too many lines. Trend line. Yes, let's try to find if we have any trend line. So we always connect higher points. We try to drag in, and what we have, this trend line, we have only two touches. So you see, we can draw it like this. We can draw it like that. Yes, so we usually draw between body and tails, in between. So we leave this line like that. But we, like I said, we love to have trend lines with at least 3 touches, because then we don't have such problems how to draw it. We can look for another trend line. We have also trend line here. Yes, when we connect those spikes close to the 36 EMA, and price also broke this line. We can delete this because price broke, so we don't need this. So we have only this and levels, horizontal levels. We go to daily chart, and we have more details, of course, on the daily. We can adjust our lines a little bit on the daily chart, yes, to see where are we right now. We can just, okay, we had some false breakout here. So we see false breakout, weekly support level. Many people try to go short here on the weekly level, and then what price is doing, 300 pips against us. That's why we do top-down approach, understand, okay, that this is, even you can still trade here, but you need to understand where you trade. This is really important to understand where you trade. Yeah. So let's try to find some maybe horizontal levels on the daily chart. Do we have anything here? Not exactly. Yes, price is here, resistance, another resistance in case of breakout. Next level is 36 EMA. Yes, can you draw some trend lines? We have trend line here. Yes, which was broken. We have false breakout, then price went down. So what we can do, we can change angle of this trend line, because what we have, 1, 2, 3, 4 touches. Yes, extension. We have this, but also price broke this, so we don't need this anymore. Do we have any other line? This low, connection to this low, and we have this line. Yes. Okay, so what we know on the daily chart, price went up a lot. We are on the weekly resistance level plus 36 level. Price move up a lot, 400 pips without bigger retracement. What can we expect? Retracement back to the 36 or back to the trend line, which is our profit zone, because like what we like to see, 1 to 3s back to the 36 EMA, ideally. Yes, we can
Tomek,
also, yes.
Before terminating this session, because it seems we are going a bit longer, would it be possible to analyze Euro? Let me check. I got Euro CHF.
Yes, of course. Why not? We can do Euro CHF. We can do
I
Euro
would say, I would add, following your explanations tonight, that let's say the average at 36 seems most important than the others.
Yes, this is because like it's like 50-60% of the FIBO. So this is like, if I can say,
Yeah,
healthy
exactly.
retracement in the, if we say about the price action, how trend is moving, how market is moving. This is
Yeah.
when we have good condition on the market, it's like 50%, 60 FIBO. 12 EMA, however, is 32 or 38%. So 12 is when we have a lot of volatility, when market is pushing, then we have retracement to the 12 EMA. So this is like a little bit aggressive combination in terms of our strategy. Yes, but basically we try to find retracement back to the 36. It's really crucial. Yes.
Yeah, yeah.
From the entry
Well,
perspective. Yes, from the 1 to 3. Yes, because
yeah,
top-down approach, generally top-down approach is to understand market direction and behavior on the higher time frames. Then we can do whatever we want on the lower time frames, of course, with our strategies, with our systems.
makes sense. Yeah.
Yeah.
So while you are analyzing this last chart for us, to me is pretty simple, I would say, and clear what you said tonight to us. I would like to remind to everybody that the recording has been decided to be given to everybody. So to all the people attended and all the people subscribed to this webinar, I'm adding that Swissquote allow trading on 2 platforms. So MetaTrader, which is the platform that Tomek is using at the moment, MetaTrader 4 and MetaTrader 5. If someone wants to check our conditions, please visit our website. I'm going to show you the website later. So before the end of this session is www.swissquote.eu. So not .com, not .ch, but .eu. It's important to land to the correct website, because from London we are covering the entire European customers, all European customers, and we grant to European customers very good conditions. So if you want to make, we can check again the Euro CHF weekly chart
Of course.
to see
So I will do
where
it.
are our shadows.
Shadows. Okay, I will do it quicker if you like. So maybe it will be possible to check another pair. Yes, because I was hoping to get more, but like you said, we are after the time. So okay, let's check this. General, yes, weekly chart. What we have? Downtrend. Yes, we have downtrend. EMAs are crossed down. What price is making here for us? short 1 to 3. So if we understand what we would like to see, we have short 1 to 3, bounce on the 36 EMA, and what continuation of the trend. This is perspective, yes. If we have breakout of the 36 EMA, then we might have maybe bigger retracement or possible trend change. But basically our approach is for sells on this pair. So let's try to find first resistance level. First resistance is here. Yes, we see 1, 2, 3, 4 touches. Yeah. Plus, of course, we know about the 36. Another resistance level is higher, where price was in the range. Support level on the lows. Yes, it's also visible in the past how price was reacting. So that's all what we need. If we try to find trend line, we will see trend line here, which is far away from the current price, but it's close to the 36. So retracement might be also possible to this level. And then what? Bounce and continuation, because we are still in the down trend. Yes. So we look for the daily chart. What we have on the daily, price started to range. Yes, because if we look for the resistance level on the daily chart, we will see that we have this spikes here, this spikes here. Also price went almost went to this level, and we have range here. And what we know, we don't have any clean higher highs, higher lows. Price is not making those 1 to 3s you see. Those are 1 to 3s which we like to see. Price is going down, is retracing, is going down, clean lower low, yes, is retracing back to the 36 EMA, is making lower high. Then what is doing? It's going down, lower low, lower high. Yes. In this case, we don't see this clearly. You see, we have this resistance on the daily chart. If we connect those spikes, what we see, 1, 2, 3, 4, 5 candles around this level. And what else we know on the weekly chart, we are around the 36 EMA here, which means that price is making for us big short weekly 1 to 3. Yes, like something like this. So our perspective right now, for me, for example, I would look for the sells after this trend line breakout. Yes, I would wait to see that price is reacting around this level, and then after trend line breakout, I will look for sells. But this I will cover during strategies. Yes, but top-down approach, you already know, okay, what I can do. Yes, if price breaks this resistance here, you can definitely look for long entries. If price breaks this trend line, you can look for short entries targeting this support level. In case of the breakout here, you look for the resistance and the trend line. Yes, so this is Euro CHF in the quick mode, if I can say. Then of course we go to 4-hour chart and try to find some entries, but currently this pair is completely not good to trade, because what we see, range. Yes, we don't see any 1 to 3s, prices in the range, so we just wait. We don't trade when we see charts like this. Yeah. Anything else, Michaela? Maybe some other pair, if we have time.
I would say that it's been pretty clear. I would like to invite the people that follow these webinars to follow also the other two that we have planned. They're, let's say, planned for next Monday and the Monday of the week after. So let me change the screen to show. Okay. I think everybody can see my screen now. I prepare a couple of slides to share with you all. As you can see, you can find here a lot of contact detail about us. Here you can find details about our next appointment with Nikos Trading Academy and Tomek. We are going to hold the second session about the top-down approach and the Heiken Ashi and Renko chart and the risk management tool that the Nikos Trading Academy developed and is granting to all Swissquote clients. I would spend a word about that. I would say that Nikos Trading Academy create a special section on their website for all our customers, for all our clients. So if any one of you that is already a client or is interested to become a client, would like to see this area, please send me an email. The area is pretty, let's say, is pretty full, is pretty rich of contents that I think useful. Here you can find the next, appointments we plan together. Here you have some information about us. If you're calling from UK, use this number, so the number that is ending in 2600. If you're calling from abroad, visit our website is www.swissquote.en. Let me check if I'm able to share with you our website. This is our website, en.swissquote.eu. Here you can find under the pricing section our conditions. We are under ESMA rules, under ESMA regulations, but we can offer very good conditions, especially on traders that are interested in more professional, let's say, trading, or traders that are, let's say, interested in trading starting from 10,000 euro. We can let's say, allow you to trade with a spread from 0.0, so 0.0 is the row spread, and then you will have €5 round turn, so 2.5 euro for each side. Of course, if you want to open an account in GBP, in US dollar, is possible and it is allowed. We can open accounts in more than 7 currencies. Again, here you can find the support page with all the contacts. I'm showing you where to find the toll numbers, so basically the free numbers if you're not calling again from UK. Okay, here we have the number of our dealing desk, then of course is open at market hours every time in case you have orders that are open as usual in order trading, let's say, reliable intermediary. Here you have the number that you can dial if you're calling from abroad and if you want to reach us in a free way. Another important section is the last one, is the one that you can find under education. In the section of webinars, you can find the webinar we spoke about. So basically the webinars, the following webinars we'll have next week, and from this page you can subscribe and register in order to attend. To all attendees, so to the participants of today, we will send the recording, and of course we will send you more information if you would like to have them about us, about what we do and how we do. Let me check the questions. Can customers use your website? Yes. This doesn't work with Ninja. Ninja, I think Satan is talking about Ninja Trader, I would say, is a platform that is designed for futures contract. So no, we are talking about CFDs. The system that is developed by NTA is developed for CFDs market and can be applied over CFDs market, at least in this case. I would say that I provide you all information. I'm not seeing any additional questions, so I would like to close this webinar with a big thank you to Tomek and to Nikos Trading Academy. I remind you that you can download our platform if you want to try our platform first, MetaTrader 4, MetaTrader 5, and Advanced Trader, which has fixed API connection for those who are more advanced. And if you need any additional questions, if you have additional questions, if you need additional information, we are available and happy to help you and happy to reply. Thanks to Mac for tonight, for this session. And
thank you too. It was a pleasure to be here.
And see you next week. Good evening to everybody.